if this is in your heart, start early, because there's no sustainable success out of the gate. You're always going to have some inevitable failures and setbacks, but if you start early, hopefully downside protected, but you're going to get the learnings. They're going to compound over time. And some of this you just can't read in a book or listen on a podcast, and hopefully we can help you. But some of it is experiential. You have to just go out and do it.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Dan French. Nearly 20 years of experience in transacting and operating real estate. He's managing director of ATX Acquisitions and CEO at ResProp Management. 2 billion plus in AUM, with a history of operating 15,000 apartment units. Sold 80 plus properties, returning nearly $1 billion to investors and partners just recently. And so this guy's got a ton of experience. They have a team that's a lot of great experience. They've done some great things over the last 15 to 20 years and really plan the market well, which you will hear about. But you're going to spend some time with Dan over the next 2 days, and he's going to do a series with us and dive into, a number of things that I wish I had known, years ago, right? He just was very transparent, even some challenging times that he shared about, through the first part of their business, right? But the lessons learned were so valuable, right? And you're going to hear that today from Dan. Dan, welcome to the show. I'm looking forward to diving in on a number of topics that I know you are an expert in. And just so the listeners know, we're going to do a series of shows with Dan. And so we can have more time to talk in depth about a few things that I know that you're going to want to hear about. Dan, give us a little bit about your background, getting into commercial real estate. What does that look like? Maybe even a couple of things for you that were crucial in your success.
Whitney, appreciate you having me on. It's a pleasure, and I hope to add some value to your audience here today. And I do want to say I'm a fan of the show. I'm also a big fan of your mission. It's very inspiring to me, actually, that you're putting some of your personal profits back into something you believe in, which is helping folks adopt when they're having some troubles there. So that rings very true to me, as people in my life have had some similar troubles. So I appreciate what you do there.
Appreciate that.
Good. But my journey in real estate really began actually when I was about 25 years old. It was fun to get started. I've been with the same business partner. His name is Pete Rex. Great guy, great friend. Someone I grew up with from the time I was 7 years old. And myself and his brother and Pete went into real estate investing. And that's how we got started, buying really small deals. And before you know it, we had a bunch of them. And this is about 2005. So to put that into context, totally different world, different environment. For any folks that have been investing that long, you might recall some of this stuff. But we were kind of working class background, trying to rise up and create hopefully some value in the world. I always thought it would be a long-term investment and long-term payout, and I was willing to kind of delay the marshmallows and make it happen. But I didn't know it would be so active. And so really for a couple of years from 05 to 07, we kind of felt like we were on top of the world, and we're our unit count, although small by today's measure, seemed very high to me at least. And I was really, I was pumped up, and I thought we were off to the races. And of course, looking back, we did a lot of things wrong. We were over leveraged. We didn't have sufficient capital reserves. We didn't have a lot of operating knowledge. And so when the tough times came in late 07 and 2008, we were one of the first groups, if you can call it a group, we were a small partnership, we were in trouble really fast. So we spent many years battling through all of that from 08 to 2011. And we avoided the worst of it, but it was a trying time, and it really, it challenged our friendship. It challenged our partnership. The whole thing almost went up in smoke. It was very, very stressful. So that's my background, and maybe I'll pause there. That's how I got started, let's say.
Yeah, that's incredible. A couple of things I wanted to mention there. Obviously, your partnership, is it Peter, did you say?
Peter Rex, yeah.
How did you all meet again, and what did that look like to say, you know what, I get questions all the time about partnerships,
Yeah.
and I talk about it often about my partnership and how I was asked to be partners with lots of people and said no, because I just didn't feel it was a good fit, right? And then, man, when I found my partner now, my business partner, I just knew. I knew we had complementary skill sets. We had so much in common. It was just different, right? I knew that it was a good fit, and even did a lot of things to kind of test the waters before we permanently said we're going to partner. So anyway, I've talked about that often on the show, but would love to hear how you knew that Peter, was going to be a good partner, or maybe you said you all knew each other beforehand and some of that. But talk through that just briefly, at least, because I know the listeners, there are some of them are looking for partners as well, right?
Yeah. I'm very happy to go into this and maybe provide some value to your audience. I would say number one, as a piece of advice, go, make sure what you're saying is really going to happen before you dive in with someone. Make sure you know a lot about them and maybe test it out, right? Their character, how they handle pressure. Because when the times are good, everything's easy. It's when times get challenging that you really find out who's made of the right stuff. So getting back to how I met Pete and everything like that. I was born in the New York City, in the Bronx, in New York City. My family, when I was 7 years old, this is the 80s. They kind of moved up to the suburban area of the New York City metropolitan area. To do the American dream thing, provide better opportunities for me. And I was lucky enough to meet Pete and his brother Rob as soon as I moved up there, through sports and through Catholic education and stuff like this. So we just became super tight as kind of family units, as getting to know each other. And that persisted over time, even though I went to separate high school, separate college, as Pete. But getting out of my undergrad, I felt something that I believe is very durable in across the globe, which is, getting access to real estate investments, or buying real estate is like a tried and true way to rise up, create value, create wealth for yourself. Or maybe if you have investors, same thing. So when Pete was the one that actually approached me with this idea to go into real estate. And the reason why I said yes, basically immediately, and Pete and his brother Rob, was because number one, integrity. I thought that was a key thing. So these are people that I know, good times, bad times, they're going to do the right thing. If the lights are on or no one's looking, it doesn't matter. Same thing. They're going to be terrific people, that I would trust with with everything. So that was number one, trust and integrity. Number two was drive. I just knew Pete from the time I had ever met him was so driven, so on the ball, really wanted to make a difference, kind of light the world on fire, this type. So to me, those are two very key ingredients to a partnership, or to a potential partner.
Yeah. And that's incredible. There's some great advice there. And a couple of things I wanted to reiterate that you said, because I thought it was really good. It's like, have they been under pressure? And I maybe I'm adding a little bit here, but have they been under pressure and performed before? And has their character been tested? Like in some way, is there a way for you to see that or know that? And it seems like you knew you knew enough about Peter and his brother to know these things. So it sounds like there was already a very high level of trust there, and you knew they were driven, and probably because of the history with them, right? Or things you already, so anyway, I think it's a great advice, and it's really good. Another thing I wanted to hit on, the 2008, you said, there's three things, and correct me if I didn't get these correct, but you said low reserves, over leveraged, and ultimately little knowledge or experience, right? By that time. And I just wonder too, because obviously where we're at now, in this market cycle and some of the things that are happening, how is that different now? So I just it's so important, especially for you all that went through that. How do you look at deals differently now, or what is the reserves or leverage, look like now on deals compared to maybe what you were doing then, or did that change, or what does that look like? So you all aren't in that same predicament again.
The key thing I think is the downside protection, just really understanding that real estate is a financial asset. And so much of the value of the asset is driven by the debt that you can place on the asset. And when you're downside protected, like today, loan to value, loan to cost, or it's in the 60s or 55%. So you're coming in with a lot of equity. So that already is like forcing downside protection. Now, even a year and a half ago, I think some groups were levering up to the 80s. And so that's not even, I don't even think that's really truly as possible today. Maybe if you have some strange debt partners that want to go in and do that with you. But, that downside protection, having a lot of equity in your deal, having long-term debt as well, these are critical. So I think we had floating on some of that stuff back in the day. Yeah, downside protection is number one. And that includes having capital reserves for something that goes wrong. These are small deals, 4-unit buildings, but if a roof breaks, guess what? You might not be able to handle that with your rent payments and the income and cash flow. Shifting from that, just choosing really a good location, a location that you want to bet on for 10 years, because you might own some of these deals for 10 years. That's how we try to look at things. We like to be long-term hold as our default. And if we happen to, go out of a deal sooner than that, then that's rare in our world. But yeah, we want to bet on a long-term location that's going to be durable with population growth, economic growth. And we didn't choose that correctly our first time around from 05 to 08. I think we got it right by 2010, 11, 12. So
yeah, there's something about how those challenging times shape us, right?
Yeah.
They really do. You even mentioned, you got in some trouble fast, or it happened fast, that you all saw, hey, we've made some mistakes here, some challenging times. You said it even, challenged the partnership, some of that, right? But man, when you can make it through those things, I feel like you're so much stronger.
Absolutely.
Because of it.
Yeah, I'm grateful for so many things. I'm very blessed. Number one, for the partnership that I had with starting out with Rob and Pete, my friends who became business partners. And number two, that we actually learned our lessons early. That's key. That's why some of the advice I would give people is, if this is in your heart, start early, because there's no sustainable success out of the gate. You're always going to have some inevitable failures and setbacks, but if you start early, hopefully downside protected, but you're going to get the learnings that are going to compound over time. And some of this you just can't read in a book or listen on a podcast, and hopefully we can help you. But some of it is experiential. You have to just go out and do it. And I'm grateful that we paid back all of our small friends and family money that we ever took in. We did right by the folks there that we had partnered up with. We didn't make any money for any of that work, but that was fine, because we got the lessons, and that was actually more important for our long-term career than getting some small financial payout.
It made you a lot more money long-term. It may have not felt good in the moment, right?
Yeah. It felt bad for a very long time. And, like my partner, Pete, and I, and Rob used to say, hey, the best day was when we got back just to broke, that we, just to break, just to even. That was like the best day of our lives, because we were so stressed out and we were so underwater that working it all out just felt great, just to get back to broke.
Yeah. Wow. And I wanted to get it right. You said you're about this downside protection. You said, I have a lot of equity, have a lot of capital, capital reserves, good location for the long term. I thought there was one other thing, and I was trying to take some notes, and I may have missed it, but
I think, I mentioned operational experience, or, how to manage an asset. So we can talk about asset management or property management. So asset management is really how you think like an owner. That's kind of called an owner's representative. That's someone that's going to check in on the performance of the deal, make sure you're maximizing the asset performance, make sure hopefully you're beating your business plan. But just that helps you be downside protected, because when you're busy, months can slip by, and then before you know it, your asset isn't doing what you performed, what you underwrote. So being a great asset manager, I think, just doesn't happen overnight. And then we had the benefit also of being hands-on, operational. Like, we had to learn property management from the ground up, because we took over our property management. So we've done leasing, we've done all the maintenance work, construction, oversight and supervision, and like GC, our own stuff. So we had to get forced into that. But again, it's a blessing to be able to do that and have that in our bones. and now I can call BS on someone who's not managing their asset well.
Yeah.
And we still are managing deals, by the way.
How would you advise on reserves? Like, how do you all think through what's enough reserves? I know every property is different and all that, but I get questions often about, well, how do we calculate reserves, and how do I know I've got enough?
Yeah, well, first it depends what kind of deal we're talking about.
Yeah.
If it's we've bought a lot in our history. So going forward from 2011 to 2019, we bought about $2 billion in assets, and that was about 17,000 apartments, almost primarily in Texas and Florida, a couple one-offs in the Mountain West, but a lot of that was value add deals and older assets. So I guess my answer would be a little bit different. If you have an older asset, things are just going to go wrong. It's what you're buying is a deteriorating asset. That's why there's these like schedules of, well, how long does a carpet last? How long does a appliance last? How long does the flooring last in your unit? So you really have to bake all that in, especially in an older asset. You have to have some reserves besides coming in with your business plan, because by year 4 or 5, you're just going to naturally have to spend this money to keep your asset, competitive in your market.
Yeah.
So that's how we kind of think about it. We think about, number one, coming into the deal, what's your business plan? What immediate exterior improvements are you making? Be very conservative on that, because it's almost always more than you expect. So you're going to have a contingency. So we always bake in a contingency. And then for your interior program, which means like you're rehabbing or renovating your units and the interior. I'm sure your folks at home understand this, but you're replacing appliances, flooring, maybe you're improving the kitchen, bathroom. Be downside protected there, because what if you're not getting the rent bumps that you expected to get on the way in? So you have to be nimble with your CapEx plan there as well. And we always want to have like a 3-year payback on the CapEx money that we're putting into the interiors.
Nice.
Kind of a high bar. But I've always taught the team that, or kind of like, that was my mental model, was like 3-year payback.
Nice. Well, let's shift gears just slightly, because I think it's related to this conversation as well. But just thinking through, you all bought a lot of assets now. You all have grown a lot, right? Over the last number of years. You just mentioned, 17,000 units, in the last, I don't know, was it 6 or 8 years or something like that?
Yeah, 2011 to 19, thereabouts.
Okay. Yeah. And so, that means you have a great team around you, right? Yeah, you didn't do all of that, I would imagine, right? Yeah, right. So
Absolutely not.
You all built a great team, and so share about that a little bit. What it took for you all to build just an A-class team, right? Or A players, surrounding yourself with A players. How have you all done that so well?
So that business is something that right now, as we're buying assets, that's a new business that we're buying the assets currently, because it's a new market, it's a new investment thesis. It's really right now, as our current firm is called ATX Acquisitions, and I can go into that later if that's helpful. But the firm that we are talking about that bought $2 billion in assets was a vertically integrated shop. So I think it's important to mention, what kind of sponsor are you? Are you a sponsor that's going to be vertically integrated, like we were, or are you a sponsor that is going to look to have your property management, construction management, maybe even asset management kind of outsourced, right? You're going to have third-party folks doing this, and you'll hire them and then oversee them. So we decided to build that platform in a vertically integrated way. And the reason why we did that was because we knew, coming out of the great financial crisis, again, this is like ancient history to some folks, but coming out of that great financial crisis, we were going to buy some heavily distressed, physically distressed deals, right? Especially in Florida. Florida at that point was like left for dead. People forget about this, but a lot of the buildings were completely 0% occupied. They were just left. The banks had taken back a lot of the keys, didn't know how to run the deals. So the banks had these deals on their balance sheet, and they would, seek to offload them to groups like ours. So Pete, as a founder and chairman, thought, you know what, this is going to be a very specific play. We're going to have to go do turnarounds, heavy turnarounds, and have an entrepreneurial team do that. And we felt that was best done with an in-house team, because you can get a lot more scrappy if you kind of set the tone as your own team, rather than hiring somebody from, that's not as invested in the turnaround of your asset. So we felt like that was the most important thing. If we're going to do these heavy value add deals and bet on the future of Florida, bet on the future of Texas coming back from the great financial crisis, we felt that that was important. So let me just set the table there. And then, is that helpful? And then I can explain.
That is helpful. You all made a good bet there.
Yeah. Yeah, it was a great bet. And a lot of execution now behind it. So that's where we can talk about an A team. Because certainly, if I was alone or Pete was alone, absolutely not. You can't do 17,000 apartments and doing well with a really strong track record during all that time without having an A team. So credit to Pete in large part. He had a vision to have a sustainable platform, and the way we came together was, I think we kind of just chopped up different capabilities, and we would go hire people that were super hungry and very capable and ambitious to have an impact on the world. And so I think A teams start with character, and that includes a mission orientation. So they have to be like mission focused if they're going to work with us, because we do try to attach a mission to all the work that we do, even if it's seemingly mundane. We want to have people that are driven to empower others. And back then there was a big mission to provide people great homes. When the whole great financial crisis is happening, they're being completely underserved. It was really sad, some of these places that people were habitating. And we brought them back to life. So that was a very, very powerful mission, and it really animated a lot of our team. So that's going to attract the right type out of the gate, right? The right character, the people that are going to be like, all right, cool, I want to get on board with that mission. And of course, the mission as well of stewarding other people's capital. These are folks that we exec level people, partner level people that knew it's a huge financial responsibility, and really actually an even moral obligation when you're accepting other folks' capital, that you have to go above and beyond. And it doesn't matter if you're tired or things went wrong or whatever, you have a mission to steward that capital well. So it just starts with character.
Maybe give a couple tips, even on hiring, how you all have hired some of your top people, on how you found them for one, but then how do you know their character? When you're going through that process, there's definitely been times I've hired people where I thought that they were going to be a good fit, and it didn't turn out the way I expected. Yeah. Right. But then again, there's been some that have gone way and above what I even expected, as well. Right. And so, any tips on how you found them, and maybe how you thought through their character, how you knew that about them to hire them, and then we'll have to move to another topic.
Yeah. So no, thanks, Whitney. And that resonates with me for sure. Like, the one thing for the audience is you're not going to get it right every single time. You're going to, you can hopefully fail forward, you get closer to the next person that's going to be like your stable, high character, high integrity, high drive, high talent person. But I think it's a mix of things. Like some of them were personal relationships that Pete had. Some of them were, a recruiter. One of our partners came from a recruiter. That was random, but turned out to be, he was like a 10 or 11-year partner with us, and still is on that former business. Yeah, some of it's just hustle, outreach. We noticed our CFO now, Rachel Ridley, was moving from the Virgin Islands into Tampa, and someone on our team hit her up. She's still with us for 11 years. And going into this next business with us as well. So I think it's a combination of just like hustle, network, putting yourself out there, and then having a good vetting process, which I don't know how much time I want to spend on that, but we have a very strong vetting process. We like to sometimes work with folks before we hire them full time, have them have like a little consulting period, that like a try before you buy kind of thing. Mm-hmm. Sounds transactional, but it's super helpful, because that person doesn't want to waste their time either. And the worst thing you can do is waste people's time in their career by hiring them wrong.
I love that thought process of having the consulting time. I think that's very valuable for the listener to think about. We have recently done that with someone, and it's an obvious hire for us. But it's been helpful just to have that time, though, to kind of test the waters a little bit, right? Before you have to, they commit to you, and like you said, you're not wasting their time. But that's some great advice. What would you say are some of the most important things to focus on? When you're all building, your business very successfully, building, I think, another brand now, it sounds like. But what would you say, for the listener who's building a business, and what's some of the most important things they should be focused on?
I think team is number one. And, if we can, it's kind of sticking with this a little bit, like an A player. What is an A player? So to me, an A player is that if you look at for that person's level across the industry that you're in, they are top 10% or top 15%. So a B player is top 50%. And a C player is below average, below the 50%. So you really want to stay away from the C. But the A player is going to move your whole business forward. And it's going to allow you to free up to focus on what you actually do best. Because otherwise you're going to be doing everyone else's work as the leader, because you can't let the ship go down. So at the end of the day, you're going to be doing it. You might be up till 2 a.m. every night if you have the wrong team. So you have to just start with it's like first who and then what, first who's on the bus. I think that's Good to Great by Jim Collins. He's the one that said that, like, first who and then what. I think that's really critical. And we spend a lot of time thinking about that. We don't always get it right, obviously. So
yeah, the team is so important. There has been a couple people that I've hired that I just knew they were great people and were driven and those things, some of the things you've mentioned, I don't even know what they were going to do yet. You just got to be on a team because you're amazing. Right. And it's hard to find people like that. And so it's just you just got to come work for us. I almost figure it out, because it's hard to find those. So no, I love that. Dan, just amazing information that you've provided, in this first segment, just going from where you all started, and thinking through the partnership. I thought you provided some great advice on just partners, finding a partner or things to think about before you partner. But then even building that team and building a business and things that were crucial to you all. Oh yeah. And what you all maybe, didn't do right or as well as you wish you had early on. Right. But the lessons that really took you forward that we should all learn from. I hope we learn from, right. And don't have to learn the hard way, but sometimes it takes the hard way, unfortunately. Right. But grateful for your time in this segment. I want the listeners to know we're going to do another segment and dive in a little deeper into another topic that whether you're passive or active, I know you're going to want to listen to. So Dan, thank you again. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, thanks, Whitney. It's been fun. So my cell phone, number one, is 845-629-1808. You can look up me on LinkedIn, Daniel French. ATXacquisitions.com is our website. And then so it'll be dfrench@atxacquisitions.com.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.